following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
I've listened to you for years. You got a great thing. I've been listening to you for over a decade. It's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. We have the Dow down 285, NASDAQ off 118, S&P's down 32, gold contract up $24.50, traded $1,152 an ounce. Silver up 32 cents at $15.50 an ounce. Platinum up 17 at $1,032 an ounce. Copper up 4.5 pennies at $2.32 a pound. Light sweet crude still can't handle it. Pretty amazing. Down 11 cents. Building cars downtown, we're at 41.17. That baby wants to go to 35 bucks, which is absolutely going to be a mind blower. Bonds, every bond market, folks, just refuses lower price. You have the 10-year up 7 ticks, 128.10. 30-year up a full point and 10 ticks at 160.03. They both look like ABC structures on the way up that will actually take out the April highs. This is going to be really wild watching this whole bond market shake out. King dollar down 388 ticks at 95.98. The euro up 81 at 112, and the yen down 31 at 123.48. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You get some damage in this market, folks. Okay, so we start with the dailies, and what you're going to see is this. Right now, the SPY's trading at 204.82. You've done 132 million shares. You're going into a swing point low out there from July 7th, which is 204.11. That's one swing point. That swing point was generated on July 7th. Your next swing point that was generated on March 26th was 204 with 153 million, and right prior to that on the March 11th at 204.40. Bottom line, folks, this is going to be, it looks to be, okay, a setup that you're going to see the market jump the creek tomorrow morning. And what does jump the creek means? It means it's going to gap under all that level, and guess where? You know where it wants to go. Bottom line, this baby is heading to the October 14, 2014 level. That baby is a long way down. It's broken everything. You know, you'll get some support somewhere down there, but the bottom line, I suspect tomorrow morning you're going to see this jump the creek. We go take a look at the NDX 100. Same deal with the NDX 100. This thing has been nasty out here today, man. NDX 100, we're already done 44 million shares. You've broken the low of the 12th of August. You broke it with volume. What does that set up? That sets up a 105.29. That's an ABC structure on the way down. Your 105.29 takes you lower than the last swing low out here, which is July 9th. That sets up 104.23, which is the April 6th time frame. This is going to be really wild, too, because we're going into option expiration. You're going to have the, well, we have the volume right now. The volume is all over the place, man. That's the other side of this. Gold contract. What do we have with gold? Bottom line, folks, gold has wide price spread, accelerated volume, all of the above. Right now, we're trading out at a price point of 1152.30. What gold has done out here today, is broken the much larger downtrend from the highs that were generated out here on May 8th. So that says gold is on its way to 1234. Right now you're at 1152. I suspect you're going to get a little flack somewhere about 1174, but that baby wants big numbers. Bonds. What do we want with the bond market? Well, first off, the 10-year yield right now is at 2.0. Let me just look at this for a second. Yeah, we're at 2.0. We're going to be under 2 tomorrow, which is just a mind blow. There's no doubt. But guess what? What you have here is this, okay? You get markets that are going south. Bottom line, if we put this up, what you're going to see, we're not that far away right now from the highs. The 10-year first, the 10 years done 997,000. What it hasn't done is gone and tested this. We have a high volume swing high. And it looks like it's a large ABC up. The high in the 10-year, folks, is 129.21. That is 1 point and 11 ticks away. That can be done very quickly. It looks to me like we're actually going to get over that, which is going to bring, the mortgage rates are going to be like the lowest they've been, period. So 30-year, what do we have with the 30-year? Same setup with the 30-year. 30-year actually is even stronger. The 30-year, we've done 230,000 contracts out here. 30-year right now is trading at $1.60. The high is $1.6507. That looks like it wants to basically get up and get over that level. King dollar. What do we have with King dollar? Let's go take a look at King dollar. What King dollar has done is that is building cause, getting to lower price. Actually, it has it all. It has it all, folks, to basically go down into this 94.44 to 93.30 level. That's the June 18th swing low. That's what is setting up out here inside that structure. Now, if you want to see how you jump the creek, folks, and you want to see how you deal with the October 2014 level that I've been talking about for quite a bit, that plenty of stocks have already got to, if you look at the New York Composite, and the New York Composite, folks, is all the stocks and ETF structures and bonds that trade on the New York Stock Exchange, okay? That is what the makeup of it is. It's basically everything, okay? That's what it shakes out to be. Now, what that has done today is this. It jumped the creek. It jumped the creek this morning. We're down $176. The high of the October level is, put this on here and you're going to see, so this is going to be the first, the transports were the first sector that hit the October level. It looks like the NYA, which is the largest stocks and bonds in the world, are going to be the first indice to hit it. That number is 10,362. We're at 10,512 right now. If we did what we did today, guess what? You're going to hit it tomorrow. What is that? Is that a heads up? That's a heads up extraordinaire, folks, for the S&P, because the S&P has a huge way down in order to come into that level. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow's down 284. Nasdaq's off $1.17. S&P's are down 31. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow down 285, Nasdaq's off $1.17, S&Ps are off 32, and as we do each and every Thursday at 20 past the first hour, we get our man, Mr. Andy Heck. Don't forget, folks, at TFNN, we do 10 hours of programming, 8 o'clock in the morning to 6 o'clock in the evening, live programming. Get it right on your cell phone, TFNN.mobi. Every Tuesday, Thursday, our man, Mr. Andy Heck, is on right after my show, 5 to 6 Eastern Standard Time. Now, Andy also has a great newsletter, folks. It's the Technomento Commodity Report. The way that you get it, you come over to our website at TFNN.com. You go to newsletters, you go to trading newsletters. You can test drive that newsletter for 1 month absolutely free. Andy Heck, what's going on?
Hey, Tom. So nice call on gold.
Yeah, we got action, man.
Got action. You got
No
action. I
doubt.
stopped out last night, 1136, which was the level that I said all along. If it got above there, I think it's saying a lot about a lot of markets here. I mean, it's actually kind of flight to quality here. If we look at the chart, I'm kind of disappointed. You have a $25 up day and you've only done 185,000 contracts. I would have thought we would have been more in the 250 range, but maybe we could write that off to summer trading. Still, this is kind of end of August vacation time. But, the thing that continues to nag at me are the divergences out there. The fact that platinum, I mean, it's back over 1,000. We'll see what happens there, but it's still $120 discount to gold. Gold-silver ratio still at around 74 to 1. That's still, we still have big divergences in this precious metals market. But it's clear that money is flowing to gold because it doesn't know where else to go.
Yeah, listen, man. I you know where I stand. I mean, the bottom line is that what is so intriguing to me this time, Andy, about the whole ratio, which kind of I've been saying, not the ratio in gold, but as to how the market and the gold equities were reacting. It was the first time in 12 years that the equities were not going with the market. And I said, and they had already got killed. There's no doubt about that. But there was force behind them. So that is my heads up on that was that, okay, man, something has changed here. And I think fundamentally what has changed is that the dollar, the sellers of the dollar, are the Chinese. Mm-hmm. And what happens, folks, is this, is that when they bring it. So the first time since 2002, right? The numbers that come out of China. Now, these numbers that I'm talking about here, folks, have to do with the official numbers from the bank. There's plenty of folks taking money out of China, period, okay? I mean, they're coming over with, garbage bags full of it. But these numbers, it was the first time that there was actually a downdraft since 2002, and it was $593 billion. And now, so in order to basically have their own yuan not crash, the only way they could do that is basically sell U.S. dollar reserves. So.
And they have plenty of those.
Yeah, they have plenty of those. So I suspect that that's the seller,
Right. And they have plenty of bonds, too.
Oh, they got plenty of everything. I mean, this is, I don't see a disaster, but it's intriguing in the aspect that, okay, this is, it seems like I come out of nowhere. Do you know what I'm saying? But, and I mean, there's plenty of folks. I don't think anyone ever thought they were going to devalue the yuan, right?
No, definitely not. We're having a kind of a bounce across all commodities today. Copper has picked its head up. It's up about 5 cents from the lows. It made a new low this week. We got down to $2.26. We're back up at 232. Even oil. I mean, if we can call this a bounce, but the XLE made a new low. I really can't see anything positive to say right now about the oil market. Even the and it's probably a seasonal thing, but even the crack spreads, even the refining spreads are kind of melting here, which means that oil products are underperforming crude today, and they have been for the last week or so. The XLE makes a new low. Crude oil is just sitting here like a sitting duck above 40. Looks like it wants to be pushed down. That's the only one. Everything else is kind of bouncing. We have grains up today. We have copper up. We have the precious metals up. The meats are up. So soft commodities are down a little bit, but all in all, kind of a bounce from what we've been seeing for the last couple of weeks today.
Yeah, well, you know what I think is really cool here, and folks, this is about as sick as you can get. The oil market is insane. There's no doubt about that. And I think there's probably just so much oil that this is a flush out on oil. Do you know what I'm saying? It's that what happens, folks, is that you can go low, but because there's so many people that are long right now, and I don't mean traders, I just mean oil companies, Andy. Do you know what I'm saying? That they're just going to squeeze them out, and it's they is not, they just happens to be markets, folks. Okay, this is the terrible thing about markets is that you can go low, and you think it's over, and guess what? It's going to go 20% lower. And then,
right, but you also have a lot of OPEC members, not the Saudis and the Kuwaitis, but the Nigerians, the Venezuelans, who are really struggling here, and their response will be to sell more to get cash flow. We're already above.
Yeah. Oh, listen, it's about survival. There's no doubt it's about survival.
We're already above the ceiling. The ceiling is 30 million barrels a day. They're already pumping and selling 31.5 million. That'll go to 32 when Iran sanctions lift. The lower oil goes, we're going to see that number go up. Unless there's a sudden change of heart by the Saudis and they call the OPEC members together again in an emergency session, to cut production. And I think that'll only happen if they see U.S. production start slipping below 9 million barrels a day. We're still at 9.4 million barrels a day. So there's just so much oil. And I see it in the term structure. Contango is out to 19% on October crude on NYMEX. And that's just, there is not one, through the whole thing, there's been, and especially in March, in February and March, we saw some clues that maybe oil was making a bottom, a short-term bottom. And it did. It rallied, 49% from the $42 level over 9 weeks. But we're not seeing any of those signs right now. So it looks like it's going to have to head lower. And if it does, it could drag copper down with it. Now, gold's a different story here because, look, technically, right now gold is in up mode because it broke through resistance. But fundamentally, it's going to be interesting to see what gold does if the rest of the commodity markets go lower and if oil goes lower. And that'll be more of a comment on paper currency rather than on commodities. Because gold has a dual role.
Okay, we're going to finally agree. Check this out, man. Because this is where I think we're going, man. I think what we're going to see is that, the oil deal is just a flush out. I mean, we've been trading long enough. We know how that goes. You know what I'm saying? It's like, yeah, oil shouldn't be this low, folks, but guess what? It's going to go lower. The snapback will be insane. It'll be so fast. And I'm thinking...
it'll be on a piece of news. It'll be on a piece of news, not on anything fundamental.
Yeah,
it'll be an OPEC announcement. It'll be a bomb. It'll be something that'll snap oil back. But from where, I don't know.
And my take on this right now is that the market is sniffing inflation. And that's where I think this is going. And the reason I think that is a fundamental reason. Well, it's twice, okay? It's a fundamental reason, though. And it has to do with as soon as the yuan got devalued, bottom line, the dollar will be the king dollar. But the king dollar is going to be a much lower valuation as to what you can actually get with it. And that's all that really matters. What matters is what does something buy. Stay right there, all right?
Sure.
Andy Heck, Tom O'Brien, we're coming right back, folks. Dow's down 280, Nasdaq's up buck 17. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is off 272. You get the Nasdaq off 113. S&Ps are off 30. We're talking with our man, Mr. Andy Heck. And don't forget, folks, 5 to 6 every Tuesday, Thursday, right here at TFNN. Get it right on your cell phone, right in the browser, tfnn.mobi. You can get all the programming there. Andy's got a great show. Comes on right at 5 to 6. Also has a great newsletter. It's the Technomento Commodity Report. The way you get it, you go to TFNN, go to newsletters, trading newsletters. And don't forget, folks, okay, commodities, yes, they trade in the future market, but guess what? Because there are so many ETF structures inside the equity markets right now, Andy converts those commodities into ETF structures. You know, this morning, man, you know, they had that article in the Wall Street Journal about Glencore.
Yeah.
And man, that's pretty intense. I mean, you know what's amazing about that, right? Is that now the first guy that started Glencore, right? Didn't he?
Mark Rich was the guy who started it.
That's right. And didn't he sell out to these guys though?
Yes, he sold out to.
So he sold out at the high. Oh my God! Right?
But he's dead.
Oh, he's dead?
Mark Rich is dead. Yeah,
Oh.
he's dead for about a year and a half or 2 years. But yeah, Ivan Glassenberg is the guy. His net worth was trimmed from like almost 10 billion down to under 3 billion.
Yeah.
One of the guys who worked as a trainee at Phillip Brothers, a guy Tor Peterson who runs their coal business.
Yeah.
It said his net worth went down from 3 billion to 1 billion on the side. But you know, look, this company is you know, all the company. Noble also in Singapore, another ex Phillip Brothers company that took up in Asia, run by Richard Ellman. Their stock is halved in value.
Oh yeah, no, listen, everything is. I'm just when I was reading that article this morning, I remember so Mark Rich, he was probably sick when he sold it then, right?
I guess, you know, I mean,
Yeah.
he's getting up there in years and so on and so forth.
Okay.
But look, at the end of the day, these commodity companies go along with commodity prices.
Sure.
So bear market, the volumes dry up. I mean, certainly, listen, this is also demand driven. China's demand is less, and these guys work on volume. So the lower the volume is,
Right.
the less profits. And it's hard to make profits in these markets now unless you're just overly short. And if you're a physical commodity trading company, you're holding inventories, it's pretty hard to be very short.
Right. You can be delta neutral, but big deal.
Right.
You're still going to get rid of it, right?
Right, exactly. So, you know, they always struggle with holding inventories, and they also have big investments, a lot of these companies. They have big investments in copper mines and various
Oh, yeah.
commodities.
And the expenses pile up. Right, exactly.
Right, exactly. But don't count them out just yet, because what they're doing here, you know, they might be losing value and all that, but while they're losing value, they're building market share.
Yeah.
So, you know, when we get the next secular bull market in commodities, these guys will come roaring back. There's no question.
No, I agree. No, there's no doubt. You know, as long as what happens, folks, and that's why you want to make sure you're never over leveraged, because if you're not over leveraged, every downdraft that occurs, you're going to end up being stronger on the updraft. That's just how life goes,
that's
man.
That's exactly right. And that's exactly what they have been doing.
Right.
Just like the Saudis are trying to do that in oil. The problem with oil, though, Tom, is that it's not just the Saudis. They have to respect the rest of OPEC. And the rest of OPEC is choking now on these oil prices.
Oh, yeah.
And it seems like, hey, the U.S. production is not going down as fast as they would have hoped it would have. You know,
well,
in
you
November,
know, Larry had a guy on this morning that is a commodities guy that he actually owns a farm, but he seems to know quite a bit about the fracking business too. And he was saying that what is really throwing a wrench in the whole deal is that, so there's different kinds of fracking rigs, and I don't have the detail totally clear here, folks, but it kind of went like this. That let's say one fracking rig, you know, costs so much money to do. Well, there's these other fracking rigs that they can do 4 fracks at the same time, right? And so that what he said is that they're bending the price curve of the expense so dramatically on the way down here that no one thought they could bend it that far. And he was saying that he thought that they were bending that price down into the $36 to $40 level, which is just a mind blower, man. You know?
Right. I mean, you know, when it comes to fracking, the one area that I do like here, and I think is getting sucked down with the oil, is the gas. Because I think that what's going on in terms of the liquefaction of gas is going to create big exports. And also the fact that, you know, all these new regulations, coal is dead, and you're going to have a lot more gas demand that you have in the past. And gas under $3 is kind of cheap here. But I think that, you know, we have to wait a little while here for gas to start moving up, because gas is just so tied to oil, and they're just selling everything energy out there these days.
Right, and the good thing about gas, there's no doubt, is that it's been low for a long period of time. So there's less people over their head there. Yeah, there's no doubt, man.
Yeah, exactly. So, it's very interesting. And what you said kind of in the first segment we were talking brought something up. You talked about inflation and a lower dollar, and that leads to higher commodities prices overall.
Right.
But the problem here is that as long as China remains this weak, you're going to still see pressure on these commodity prices. You're not going to. I mean, gold's a different story. You're going to still see it, and maybe that's the reason we're seeing the divergence in the industrial precious metals, because automobile sales are down, and they're just not responding. They're acting more like copper here than they are like gold right now. And gold's been strong all throughout because these divergences have existed now for months and months.
Yeah, well, listen, it's going to be intriguing to see how, gold's in an ABC structure up right now, and gold likes to do a 1 to 1.50. So it's going to be interesting to see what the next pullback's like. Because if the next pullback's on light volume again, gold's going topside big time, not in a small way.
The problem if gold goes big topside here, it's a bigger problem for everything. It's just a discrediting of currencies, and that's why I think we have to really watch it. It really does not bode well for stock prices.
No, man, I'm long gold and short stock. I mean, it's a beautiful thing.
Very difficult for the stock market and for and for all paper currencies. They're all just going to melt away. So, a central bank is going to allow that, or are they going to be able to control it? That's going to be what's interesting to see.
Well, they will be able to control it at some point. What I've found on downdrafts is that it takes them a good 2 to 3 months to get their handle around it. You know what I'm saying? And then they will control it, but they're going to control it at a much lower price than we are right now, meaning the equity markets.
In a microcosm, you saw the Chinese try to control their equity market, and they haven't done such a good job.
Yeah, that's not even close, right?
I mean, exactly. We would never ban selling here. We would never,
But they banned selling banks in 2007, 2008. You couldn't short the banks. Yes,
that's true, and it made the stock market kind of stop.
It took 6 months after that, but it did it. That's my point. It seems that if I've learned anything, man, is that all these governments will do anything and everything they can, and most of them don't know a freaking thing. So it's but they're
reactive rather than proactive. That's always what it is with that. So we're going to see. I mean, it's going to be a very interesting. I think the one thing I'm really bullish on is volatility on all these markets across the board. I think we're going to see once September comes around, once vacation time is over, we're going to see real wide price swings, widening ranges across the board.
September, wait till tomorrow morning, man. You're going to see this market gap down.
We'll see.
Cooking, brother.
Take care.
Hey, we look forward to the show at 5 o'clock.
Talk to you later.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. Coming right back. Dow's down 260. Nasdaq's off 111. S&Ps are down 30. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. If we take a look at the Dow Industrials, I'll give you the strength versus the weakness. So inside the Dow, you have the strength is Walmart. That's up 10 cents. You have Procter & Gamble up 8 cents, and Johnson & Johnson's up a penny. Taking itself in a big way, too, by the way, is Disney. Disney's down 6%. You're down $5.90 with volume. You're at $100.54. Merck, following it right up, that's down 5%. That's down $2.41 at $57.25. Boeing is down $5 at $137, and you get American Express down $193, trading out at $79.02. Inside the NDX 100, what you have is this. The strength inside the NDX 100, then is down 100, is NetApp. That's up, Net Appliance, that's up $1.11. You have Green Mountain is up $1. You have Mattel up 33 cents, and you have Whole Foods up 23. Taken away from it, on the way down, Netflix is down $9 at $1.12. You have Advanced analog devices down $4.13. JD.com is down $183, and Micron Tech is off $1. Let's go over. I want to go over to ADI for a second, because I believe what we had out here is that when we take a look at ADI, analog, yeah, sure enough. You talk about, oh man, this is intense. So analog devices, folks, had come out with the numbers yesterday. This equity had been off its high of $68. That high was generated June 1st, goes straight down to 57. What you had out here yesterday is that, and this is the classic if you want to see how, if you have my book, The Art of Timing the Trade, you know I spend a lot of time on price volume, and I spend a lot of time on swing points, and how swing points do the talking, walking, and squawking. If you want to see just something amazing, and you don't get to see this a lot, is that Analog Devices yesterday was trying to take out a small swing point of $61.23. Now, it should have been able to take it out in a heartbeat, because we got to $60.82 and you had volume. When you see something like that, folks, that's a huge problem. That's what the market did intraday yesterday, by the way. Sure enough, they sell it down, and then what do they do today? They gap it down, and now it's going to turn into an ABC structure on the way down, and it's a big one. That is really wild, man. Crazy. Disney. Let's go over to Disney. What you're going to see with Disney is this. They're just taking Disney apart. The doors aren't big enough to get out. This is the second gap away on the way down. Disney was trading at $122 12 trading days ago. You're at $100 right now. Disney is going after, and this is going to be a huge heads up, because Disney was one of the darlings of the market, should have been one of the darlings of the market too, by the way. The thing was on a nonstop deal on the way up, huge, went from $48 to $120 without almost a break. Guess where it's going, folks? Disney is going to the highs of October 2014. That's down another 14 points from where we are. And we'll see whether it holds. The bottom line is that the way that it is traded out here this week, I can make the case that it is not going to hold and that it's broken, and you'll get Disney down somewhere to $69. So there's a lot of destruction that's out here. It's fast, it's furious, it's all of the above. That's how this market is setting up. Now, what hasn't broken down yet, this is just a mind blower, because when this thing breaks, you're going to see the NASDAQ get just taken apart. And percentage-wise out here, the NASDAQ is getting taken apart today. The NASDAQ's down 2.3%. The Dow's down 1.6%, and the S&Ps are down 1.6%. But really, the way that the IBB likes to trade, so the IBB is down $11 today. That sounds like a lot. Well, guess what? The IBB is capable of going down $25 in a heartbeat. What it has done today is that it's taken out a B point of an ABC structure on the way down. So you got an ABC down. Your A point on this, let me put this up, daily. So your A point on this is the high that was generated out here on the 5th of August. That's 390. Your B point is 357. So you're dealing with $33. Your C point is 72. So 62, 52, 42, 39. Yeah, that's where we're going. You're going down to 339, which totally makes sense. Why? Because the low that was generated out here on the 30th of April, that's 330, and the high's 345. You know, that baby there, you know, I suspect tomorrow we'll get a lot more juice on the way down. What you are going to have out here overnight, there's going to be a huge heads up. The unfortunate part about a heads up is that more than likely what you're going to see is that you're going to see the market jump the creek. We had a heavy open this morning. You know, bottom line, I expect you're going to see a heavier open tomorrow morning. And the reason being, it has to do, let me put the Dow Industrials up for you for a second, because the NYA did it this morning. If we take a look at the Dow Industrials, what you're going to see is that the Dow is at 17,055. And what the Dow has done is that we're right at the last place where it wants to jump the creek. And this is the lows of 2014. Watch if I put this back, how this is set up. This is pretty intense. The low of December of 2014 was 17,067. We're at 055 right now. The low of February is 037. That level right there, folks, it wants to jump it. You jump that, and it's possible that, let's see. No, we're not going to be at 7. Well, it's possible that next week, the Dow would be the next indice in order to hit the highs of the lows of 2014. And that number inside the Dow Industrials is 16,600. And you can see, guess what? 3 weeks ago, that looked like a long way down. Today, it is $400 down, and we're down 297 right now. The S&Ps, just to go over the cash S&P with you to see how far that number down. You know, the Dow, yeah, it's only 600 points down. The cash S&P and the S&P itself, that's a long way down. We're at 2,047. You're talking 1912. So when we're dealing with that number, you're talking about, what, 135 points from where we are. And that's the high, folks, of the low. It's not the low. So get your stops in. It's not too late to get your stops in. That is the name of the game, folks, okay? Because what you are going to see is this. Because of the way that we consolidated for a full year, the break is on. We broke the consolidation. The break is downtown. Money managers, CFAs, all of the above, each and every one of them more than likely are in a losing position. You're talking about we're August 20th. They have a choice. What the choice is this. They have their clients' money. They're getting paid fees. If the clients just lose a little bit of money, it's not the end of the world. They're not going to go out of business. After 2008, these clients are not going to take flack going down and be down 10, 15% and then pay fees on top of it. Just not going to, well, my take is it's not going to happen because people are still remembering, and we're going to remember 2007, 8 a long time. What does that do? That sets up more professional selling, which would be really smart because guess what? They'll be in business next year. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow's down 306, Nasdaq's off 126, S&Ps are down 34.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 322. You get the Nasdaq off $132. S&Ps are down 36. And bottom line, folks, is that you're going to see more thrown at this market coming into the close. Why? Well, but guess what? You have a situation that you basically have gone lower, explosion of volume, you've broken the consolidation, all of the above. Yeah. And what that sets up is lower price. Let's go to Rick in Largo. Hey, Rick, what's going on?
Hey, how you doing?
I'm doing great, man. You having a good day out there?
Oh, yeah, I love your show.
Thank you.
I always catch it every day.
Appreciate it, man.
I was looking the currency, USD JPY.
Okay.
And I was just wondering what you thought about that. Looks like it's getting towards its top.
So I get the yen trading at 123. You know, it looks to me like it's going to go down and try to, first get into this 122 to 120 area. That's the way it seems to be set up.
Okay. Hey, the other question was have you spoken to Rico lately? I think the guy from Costa Rica. One of the guys on Larry's show was talking about an earthquake towards the end of the month. And I was just curious what his thoughts were.
Oh, we'll have to get him. He's been in the den all day. Let me see. He might be sleeping by now. I'm not. No, he's probably up. We'll get his take on that. If not today, tomorrow, man.
I appreciate it. Hey, love the show.
Thanks so much, man. Wow. Okay, man. Have a great one. Have a safe one. So, market-wise out here, folks. Okay, so check this out. You're coming into. Well, you know what also happened up here too. So. You know, the Dow started the breakdown, in a huge way. When that baby, the 50, crossed the 200, that's the death cross. What you have out here tonight, this is what's going to happen tonight. If I put up the cash S&P for you, and what you're going to see, and man, this thing was a long way down, but guess what, man? When that trapdoor opens, it's pretty sick how fast it comes. Well, the cash S&P just blew away the 200-day. I mean, with conviction. I can make a case here. Well, you know what the case is. The case is that, this thing is going to the October level. And we'll see if, in fact, it's going to hit the 1862, Because that's the 1862 is the bottom of the 2014 area. Now, what has happened is that many equities, this has been going on for 2 or 3 months now, and that's where I came up with this, because it's a high volume low also, folks. That's what's also going on. But that level right there, that is where many of these equities have already gone down to, So that's a big number, and that's a number that more than likely we're going to see hit sooner rather than later. I suspect tomorrow is going to be a nasty day in the marketplace, and I know you can say, okay, why wouldn't there be a bounce? Well, watch this. There's still, folks, no fear in the marketplace. That's unbelievable. The largest downtick today was a minus 1111. When you even come close to making a bounce of a bottom, you're going to get a minus downtick of 1250 to 1375. And what a downtick is this. A downtick is that you have simultaneously selling inside the marketplace at the exact same time, because the market's fear and greed. We're all the same. And for some reason, that's how bottoms get made. And guess what? We're not even close to it. Excuse me. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to come back with more numbers. Dow's down 352. You get the NASDAQ off of 138. S&Ps are down 39 bucks. They're going to be down 40 bucks. Pretty amazing. Going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Follow what you love, and it'll take you where you want to go. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow down 357, NASDAQ off 141, S&P's off 43, gold contract up $24, trading at $1,152 an ounce. Silver up 33 cents at $15.51 an ounce. Platinum up 17 at $1,032 an ounce. Copper up 4.5 pennies at $2.31 a pound. Light sweet crude still can't handle it, folks. Down 45 cents at $40.82 a barrel. Bottom line, oil looks like it's going to go test the lows of 2008, which is 32 to 35 bucks. Pretty intense. Bond market. Ever-ready bond market, folks. Wants higher price. 10-year up 10 ticks, 128.13. Looks like it's going to be an ABC structure on the way up, and I suspect we're going to go after the B point tomorrow of this ABC structure on the way up, folks. Going after its highs of April of 2013. 30-year up 1 full point and 12 ticks at 160.06. Same setup there. 30-year also wants to go after the B point. We're going to know real quick whether it has the volume. King dollar. King dollar just can't handle higher price. King dollar down 573 ticks, 95.79. King dollar is going after its June 18th swing low. That is a 94.40 to 93.30. Euro is up $1.11 at 112, and the yen is down 40 at 123.40. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You got a nasty market out here, folks. They took it south with volume. They broke the consolidation on the way down. We are on the SPX. Well, here, I'll do the SPY first since everyone definitely has the SPY. The SPY has closed at 204.01. We've done 182 million shares. You broke the August 12th level, which was the 205.36. That had 172 million shares. You got an ABC structure on the way down. Now, this is what I think you're going to face tomorrow morning. We are at 204.01. And when you take a look at this consolidation, what we have is this. The lows of March 11 were 204, let's see, 204.40. Then you have April 204.12. We're at 204.1. You know what this is going to do, folks? This is going to jump the creek tomorrow morning. What jumping the creek means is this. You're going to gap down on the S&Ps. More than likely, this can gap down 2 points in about a heartbeat, and we'll make the route down into this 198 area, which was the low that was established in December of 2014. We go take a look at the NDX 100, the 3 Qs. 3 Qs, same type of setup, came down with velocity, wide price spread, accelerated volume, all of the above. The Qs did 55 million shares, broke a B point. Wide, man, it just killed us, B point. The B point, of course, was the August 12th, 108.22. You had 41 million, we did 55. What does that set up? That sets up a 105 in the Qs. 105 gives you the March of 2015 level. That's the way that little baby's set up. Gold contract. What do we have with gold? Wide price spread, accelerated volume. Bottom line, gold wants higher price, has got higher price, is moving with velocity topside, up 23 bucks. We've done 173 million shares, contracts rather. I suspect what gold has also done, folks, is this. The gold equities, you got a lot of ABC structures on the way up. They've taken the B point out, taken them out with volume, all of the above. What gold did out here today is this. Gold broke the downtrend that has been in place since May 18th. That's saying that gold wants to go to 1234. We're at 1151. It came off that bottom of 1057 with some action. So I expect you're going to see higher price, and those higher prices are going to continue. We go take a look at the bond market. So what do we have with bonds? Well, first off, the yield on the 10-year, folks, is at 2.0. We're going to be under 2 tomorrow in the 10-year. We take a look at this 10-year, and what you're going to see is this. The 10-year right now is at 128.14. We did 1 million contracts. The B point on this 10-year is 128.22. So you're talking only 8 ticks. You take this B point out with volume. The high of the 10-year is 129.21, which was established in April. Looks to me like it's going to blow it away because your A point on this is 124.14. Your B is 128.22, so $4, 4.5 actually, gets you 131.20, and the high is 121.21. So that says lower yields are coming at us. Now, if you happen to be in front of a machine, what you had seen is this: is coming into the close, the S&Ps went down an additional $10. Okay, that is about as intense as you can get. I want to walk you through, though, why. Well, my speculation why. This is what ends up happening. If I pull up an S&P contract for you, what you're going to see is this. An E-mini contract, folks, okay, your margin on an E-mini contract is $5,000. Bottom line is that on one contract, we went down so fast and furious today that the last breath on the way down were broker dealers selling out clients that were long and wouldn't close their contract. That's what you had out here. You know, because the bounces have worked so many times. This is where this thing gets nasty. But, you know, I saw this coming up and I said to myself, oh, my God. Bottom line is that the S&Ps, the futures, they went from 42. We were at 42 at 20 minutes of. Coming at the 4 o'clock, you were at 40. And guess what? They jammed them down to 25. That's what that is, you know. Now, what does that mean for tomorrow morning? Well, what you have is this. You're only going to get sold out, okay, if, in fact, that you got too close to the margin. There's two different things that end up happening here. You get too close to the margin, and simultaneously the volatility goes up. That's what we had happening here, okay? So if you're going to get sold out, folks, they always give you a shot at it. Bottom line, it's trouble in paradise, and it's big trouble, because what you're going to have out here tonight is that you're going to have plenty of folks, unfortunately, that are on the wrong side. They're going to get called out, and if they don't basically sell out, the broker-dealer will sell them out. You know, this baby is set up to jump the creek. You know, we'll see where it shakes out, but my take is it's going to be a nasty Friday morning. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You had the Dow down 350, Nasdaq $140, S&P's down 48. That's pretty amazing. Percentage-wise, this is what you have. The Dow is down 2.06%. The S&Ps were down 2.1%, and the Nasdaq was down 2.8%. Overseas, what you had out here, folks, today is this. The FTSE was down 0.5%. The CAT was down 0.2. The DAX was down 2.3%. Now, I'm going to show you the DAX for a second, because what the DAX did out here this morning is it jumped the creek, okay? So if we take a look at the DAX, it'll give you an idea of what I expect we're going to see out here in our own markets tomorrow. It's jumping the creek, you know. You can jump the creek on the way up, too, by the way, folks. So on the way up, yeah, it's great. On the way down, it's a freaking disaster. Bottom line, it jumped the creek. It gaps away. The bottom of the consolidation inside the DAX was 10,600. Bottom line, it opens and just jumps down 200 points. Boom. See ya. Don't want to be ya. Now, the next level that the DAX has any type of support is down another 300 points. We're down 249 points. I expect what you're going to see there's nothing in the way of it, because that's how it went up. It went up from 9,300 nonstop to 12,300. Well, when they get down and there's nothing, no support, meaning that, you know, traded there for a bit of time, that's problematic. If we go over and we take a look at the Asian markets, what you're going to see inside the Asian markets is this. Let me pull this up for you, because it's consistent right across the world right now. Asia last night, we'll go take a look at the Hang Seng first. Hang Seng was down 1.77. The Hang Seng, the prior night, was going after its high volume swing low. Well, it got into the high volume swing low and closed below it. So we went to a price point of the high volume swing low was 22,800. Bottom line, we're 22,757. Now, what does that set up? That sets up, oh man, this is nasty. This is going to be a trip, man. We're going to, wow. Okay, so check this out. This is set up. This would be really crazy. Okay, so the Hang Seng tonight, folks, is going to give us a huge amount of information, and this is why. The Hang Seng, we're 22,700. If the Hang Seng jumps right here, it's going to be really nasty, because the Hang Seng should hold on here, but the way it looks to me, it won't hold on, and in fact, it's going to jump again to the 2122 level. 2122. 2122? Man, that's way too, that's insane. Hey, we'll see where this shakes out, man. 2122. 2122. That's 1,500 points. It's not going to jump 1,500 points, but that's what it looks like. It looks like it's going 1,500 points lower. That's my point. Bad scene. That's the bottom line. Now, let's go over to the XAU, the HUI. XAU, HUI, as you know, basically, you know, we kind of picked up a few weeks ago that this is the first time in 12 years that the gold, silver, equities, metals themselves were not going with the S&P. Bottom line is that these are ABC structures on the way up. If we take a look at an Eagle first, AEM, what you're going to see is that that baby did it. It got up to 27.91, broke a B point, broke it with volume. We had out here today Rango Resources, that did it. Rangold up 347 today, up 5%. Takes the B point out. The B point was 1.3 million. We did 1.392 million. So bottom line is that you definitely have some action up here. Hewlett Packard just come out with numbers, so let's take a look at what Hewlett Packard has to say. Hewlett Packard closed at $27.37. It's trading right now at $26.70. Numbers go like this. The estimate, let's see. Okay, so their estimate was 85 cents. They made 88 cents. Revenue, $25.4 billion. They pushed in 25.3, so they didn't make it. That's the real bottom line. Shares are down. Ross, R-O-S-S, let's see, did they come out with numbers too? Ross closed at a price point, R-O-S-T it is, R-O-S-T. Ross closed at $55.25. This is trading at, ooh, this is getting killed, holy cow. This is trading at $49.61. Let me look at this for a second, because this was, ooh, yeah, wow. Okay, so check this out. Ross Stores. Huh? It was screaming. It's a high volume swing low down there. 49, that's sick. Okay, let's go through it. Ross closed at $55.25. It's trading at $49.88. Numbers go like this on Ross. I wonder if this has to do with something. Oh, there they are. Okay. Let's see. Ross reported a profit of $258 million, net income 63 cents a share. The results, this is even sicker. There's something that's bad in here. The bottom line is that it's saying that the results beat Wall Street expectations, but they're trading down 10%. The discount retailer posted revenue of $2.97 billion, which also beat street forecast. 10 analysts surveyed by Zacks expected 2.94. Ross Stores expect full earnings to be $2.40 to $2.45. Bottom line is that whatever is going on out there, it's getting toasted, roasted, and all of the above. It's down basically 11%. And that 11% is going to take it into and down under its last swing point. The last swing point is 47.61. Yeah, this thing is going lower in a big way. Let's go see if CRM, is that coming out? Salesforce, are they coming out with numbers? Salesforce closed at 67. That's trading at 70. That may come out with numbers. Let's see. Yeah, this come out with numbers also. Salesforce, their revenue is $1.6 billion. They're seeing that's second quarter. They see third quarter revenue come in at 1.6 to 1.7. That revenue is up 24%. And, okay, so let's see what this looks like. Yeah, that's not much. Salesforce was down $3.22 today. It's up $2.30 after hours. And that's going to have a hard time at these highs also. That's what it comes down to. What a Salesforce deal there, that's going to be a market deal also, folks. That it's going to just be hard to get up into a higher price in a market like this. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
Doing well, Tom. How are you today?
I'm doing great, man. How's your water collection going?
It's going good. I'm still using what I had collected. My lawn is looking pretty sickly, but it's still alive. And
that's awesome, man.
Yeah, I'm just barely limping the thing along till next winter. So.
Yeah, you stay right there. You know, I was watching HD TV the other night, and I was seeing all those houses out there. Well, actually, I was watching one. If you ever watch this Off the Grid at HGTV, and it was really cool. They had the water collection systems out there. You stay right there. We're coming right back.
Okay.
Dow finished down 358. NASDAQ off $1. 40. S&P's down 47. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 358. The Nasdaq off a $141. S&P's down 17. All with monster volume, by the way, folks. You broke swing points, broken with volume. NYSE did 927 million. Nasdaq did 2 billion. We're talking with Brent from Martinez, California, and I believe we're going to be talking about Franco-Nevada, FNV.
Yeah, I'm long gold and silver through the SLV and the GLD, and I also have calls on Randgold, which you talked about. And then Franco-Nevada, looks like the two of those both broke B points today, and I just wanted to have you take a look at it.
Yeah, you got action here. So when you're talking Franco-Nevada, folks, and Royal Gold, they are both royalty companies, and you can get a good indication of where the metal is actually going. Franco-Nevada, we do own this baby, and we have the calls on Randgold. Bottom line is that we broke the B point, broke it with volume. You're trading at 47.35, and the B, the C to D is $52. So I think we're going to get what happens with ABC structures, folks, is that the A to B is a straight line move. The B to C can go all over the place. In this case, the B to C was that the equities are so strong that we only went 5 days sideways, and bang, you take it out and you do it with volume. And this volume characteristic, folks, inside these golds right now, this is really hard to do. This is what, because the extension up, because gold had been down for so long, had some real juice behind it. But yeah, we get action, man. And, Rheingold's a funny stock, man. Rheingold looked to me yesterday like I'm saying, oh, man, this thing ain't even going to move. Do you know what I mean? And prior to the market open today, folks, the Rheingold, the symbols, GOLD, bottom line is it was already bidding up, and it blew away a B.2 and did it with volume. What's going to get intriguing on that one, Brent, is that we're going to get, I think, a lot of information about where the run and the gold equities, the silver equities, and gold itself will stop and pull back from probably Rheingold, because this is what I'm speculating to this point. You see how Rheingold gapped higher? This very well could be like a 3-gap play, and that was the first one. If we gap higher tomorrow and then you do one more gap, what's going to happen there, folks, is that a 3-gap play is an indication, number one, if you're going lower, that means the stock wants to go a lot lower. If you're going higher, it means it wants to go a lot higher. And they're very fast moves, but check out what they do first before they do it. If it's a 3-gap play, Rheingold could, end up gapping up to somewhere about 75, okay? Then what ends up happening? Something comes in the market, and they fill the gaps, and they come all the way back down. They fill the gap, and then take off again, man. I've paid a few really nice tuitions, meaning for my children, not paying, actually making bread on these 3-gap plays. So, because the thing that's sick about them is that they are fast both ways. So what I'm digging about what Rheingold just did here, Brent, is like, okay, if it's a 3-gap play, we'll get a better indication of what the actual physical gold is going to do too. Do you know what I mean?
Yeah, we'll see what happens. I personally prefer just a longer ranging bar without a gap, but that's just my...
I agree. No, I agree. I know that, but that isn't what we got today. I agree. I know. Yeah. Believe me. I know what you're saying. The worst thing... It
has to be filled at some point.
The bummer is... That's right. What you're hearing from him is experience, folks. The bummer is there's no doubt when you're in something and they gap higher, it's like, oh, man, then you got to try to sleep. It's like, how are you going to sleep? Because, in this particular case, we know that gaps get filled, and this gap will get filled. So we'll see where the
75 first, and then you can close it up. That's fine.
Yeah, no. My take on it that's what's going to happen. And we're going to know. Bottom line, folks, is that I don't expect us to see what's going on in Asia at 10:30 tonight. But if you really want to understand our futures tomorrow morning, if in fact the Hang Seng goes down another, 1.5, 1.7%. That means there's jumping the creek. If Hang Seng jumps the creek, you're going to see Europe jump the creek, and you're going to see our markets jump the creek. And it's going to be very hard for a Friday after a down week like this to get a positive week going. You have option expiration. That's going to throw a whole another deal into it, because what has happened in option expiration is that they've been pretty calm option expirations. This one, I don't think is going to be at all. The dailies, the weeklies, you have the price spread, you have the volume, you have everything above. And, I think there's going to be some heavy volatility in this market that will continue. The real key, of course, is going to be inside the metals market. Are they going to be able to push that higher? And, we're going to gap up $25 there, because inside the gold market, so the gold folks, went up 2% today, 2.2. Silver went up 2.2. That's not bad, but you can on a Friday, you can go both ways, 3.5%. So get some sleep tonight, man.
Do you have a second, Tom, to look at the euro?
Yeah, absolutely.
Yeah, I have the volume just for today, but I don't have the volume bars going back at that swing point.
Well, you know what I do? This is what I do. For the euro, I use the only consistent volume in the currency markets is the dollar index, which is 60% of the euro. And it's because that trades. The rest of them, what ends up happening, folks, is that the volume characteristic is what bank you trade with, and that's it. If you take a look at the dollar index, bottom line is that dollar index came down on volume. That is saying that the euro has been going up on volume. And I know it's totally counterintuitive, but bottom line is that this euro wants to go to 114.67. We're at 112.36 right now. So.
Yeah, it looked like 112 was an area. If it got above that, which it did today, that like you said, it could continue up to 114 or something. And of course, that's going to have, the counter to that's going to be the dollar going down, which is, I know you've already given some price targets, which would make sense. I mean, they all kind of correlate.
Yeah. Which, it's like, why? I can. No, seriously, man. Do you know what I mean? It's like, it's so weird when something like this happens, folks, because, we know that the European markets are worse off than we are. We know that they're broke, okay? All of this stuff. It looks to me, when I was talking to Andy Heck a little bit earlier, this looks to me, and Dave White in the Den, he basically, was saying it's going to be a competitive devaluation of paper currency around the world. And what does that do? What that does is this. The dollar will still be the strongest paper currency, but the metals are moving with strength. I expect what we'll see after oil goes down to the 32, 35 area, that will move with strength. And it looks to me like inflation, is really going to be here. And the correlation, you got to just wrap your head around what a fiat currency is. No, what money is. And money is, I'm not talking paper money, I'm talking all money. I'm talking paper money, digital money, gold money, whatever it is. It's a barter going back and forth, and it's what something can be worth. I think that's why the metals are moving higher, because the currencies are moving lower, and gold is proof for 5,000 years that you're going to have the same amount of money. And that's what we have happening here, because the other ones are going down, gold is just moving up for the same amount of suits, cars, and everything. Brent, have a great one, man.
You too. Thank you very much, Tom.
Okay.
Take care.
You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Some of the high-volume stocks in this market. This was a high-volume sell-off, folks. Disney just got absolutely smoked. That was down $6.43. Netflix was down $9.57. You had Citigroup off $1.76. Merck was down $2.73. JP Morgan was off $1.66. Apple was down $2.36. Now let's go over to the financials, because the financials, folks, XLF. We'll start with the XLF first. The financials are found always the last to basically give it up. They can seem to stay up there, and they stay up there pretty good. And that's exactly what you had out here today. Yesterday, if we take a look at the XLF first, the XLF, the high in the XLF is 25.62. We're still only at 24.56. I mean, that's nothing. What you do, however, is that you came down hard yesterday. We came down with 46 million shares yesterday, 53 million today. We'll see how it basically handles the 24.12 area. JP Morgan Chase, we take a look at JP Morgan. That was one of the movers downtown with volume out here today. What you have with JP Morgan Chase is that you have a seller. Came out of the woodwork, 20 million shares. You went into 21 million shares. Right now, JP Morgan's trading where it was trading in May of 2015. You have a swing point out here that it looks like it's going to go after. That swing point being the July 8th level. That's 65.20. And this is another one that more than likely you're going to see it jump the creek. The first place that it has some decent support, and we'll see what type of volume it has as you come into that, is the 64.48 area. The Exxon Mobils of the world, the Chevrons of the world, the Exxon Mobils and the Chevrons are giving some of the best information that oil is also going to lower price. Exxon was down 166 today, 74.57. It had broken its B point of an ABC structure on the way down yesterday with volume. It followed through today with volume. We are at 74.57, and 72.79 is the A to B equals C to D. Now, you got to remember something. That's a one-to-one structure. They can do a lot more than a one-to-one structure. CVX, which is Chevron. What do we have with Chevron? Chevron is trading 79.24. This also followed through downtown, $1.67. Chevron is an ABC structure on the way down to 76.11. Now, when you take a look at these, where I suspect we're going to go, because markets are just always relentless, is that they want to go to the lows of their trading from 2008, which is pretty intense. Chevron's low is $55. It's already $4 into the low. The high of the low is 83. If we take a look at ExxonMobil, what you're going to see is this. ExxonMobil, we're at the 74.57. The low of 08 is 56. That's also $6 into that level. Exxon's going to have a chance at $67, to basically get some support. We'll see if that comes to fruition. Now, with that being said, this is where I'm going to go back to the oil market again, because the Exxon Mobils and Chevrons of the world have been the most consistent, like, oh my God, why did they fall apart? Because they fell apart, by the way, before the oil market actually fell apart. So somehow they telegraphed that oil's going a lot lower. Now, oil's a mess. There's no two ways about that. Oil, has come down from $100. Let's take a look at this. I'm going to do a continuous contract on this for a second. So oil's come down from, well, actually, no, it's only 60. It's come down from 61 June 24th. You're dealing at 41 right now. Now, if we pull this up and we put this on a continuous contract, what you're going to see is that we took apart the last two bottoms. The last two bottoms were 43.58, which was established in January of this year, and 42.03, which was established in March. The leg down was dramatic. That first leg down, so your first leg down from June of last year. So this is 1 year. June of last year, you're at 107. It goes straight down to 44. You do a counter trend bounce up to 60. Now, this is about sick as you get. So if I did an ABC on this, watch how this works. 107 gets you down to 44. So you're talking what? That's 56, 61. You take 61 off 62, that gets you oil to $1. Well, we're not going to go to oil to $1, folks, okay? What I do expect you're going to see, though, is that, we bring this back, there's nothing stopping this right now to get into a price point of the lows, which is 32. You're at 41. That's not that far. It's only $9. So it's going to go test it. What you want to do is you want to line up. This is where my head's on. See, my head is on this to basically set up a long trade inside probably ExxonMobil or Chevron. And the way that you want to set that up, okay, if you're in it, don't stay in it, whatever you do, okay? But the way that set that up is that you'd be looking for a rejection of lower price first in the XLE and XAU, and ExxonMobil and Chevron. Simultaneously, what I'd be looking for is getting as close to possible as that 08 low. And that's the way that this thing looks to me like it's playing out. Because the amount of pain, in this market is about as intense as you can get. And, for all you folks that actually work in that sector, man, I feel bad for you because that sector by itself, folks, okay, it's nice that, we can have, cheaper prices in a pretty huge way, but the amount of jobs that are lost in that sector get it's intense, man. It's really intense because I suspect most people in that sector never thought it could. It seems like the oil sector does this all the time, like it's 3 or 4 years, but every time that it's going up, everyone says, oh, no, it's not going to happen again. If we take a look at the unleaded gasoline, what you're going to see is that this unleaded gasoline market took out swing points, took them out with volume. Right now, we're at 138.30 in the unleaded. This is wholesale. We were at 152 5 days ago. This baby is an ABC structure on the way down. Watch this one. I mean, gasoline's going to be cheap, folks, big time. This is going to be crazy, actually. So your 8 point is 178. Your B's 144. 34 cents. You're going to 22. We're at 138. Wholesale is going to be 122. That is going to get us really inexpensive gas. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. And, of course, don't forget, our man Andy Heck is coming up right after us. Dow down 350. NASDAQ off $141.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And don't forget, as you just heard, that promotion, our man, Mr. Andy Hecht, is going to be coming up next, growling and prowling with you, 5 to 6 Eastern Standard Time. You get that programming right on your cell phone, tfnn.mobi. Now, coming into tomorrow, of course, you get option expiration. That has volatility period. On the weekly charts right now, folks, if we take a look at some of these weeklies, what you're going to see, we'll just start with the SPY. What you're going to see out here is that the characteristic thus far is that the dailies, you've come down on volume. The weeklies, you've come down on volume. Thus far, coming into this swing point, this is what you have. We did 193 million today inside the SPY. The last low that was established out here on the swing point basis, which is crucial. Let me put this up here, weekly. Pull this back. Whoops. Come. Like this one. Okay, so last swing point out here, your low that was established was the week of July 10th. We had 729 million shares. Thus far, we've done 517. So bottom line, the way it's set up is that it's going to have the same, maybe more volume, hitting the 204.11, because we're already below that. What I expect you're going to see out here is this. This market right now is taking aim at the 205 level to 197 level on the SPY. That's how that's set up. If we go take a look at the Dow Industrials, that's already broken. You know, the Dow basically broke with volume, broke with everything. You know, bottom line, the diamonds, the number was 170.10. Well, actually, that's where it's going to jump the creek. 170.10 is the number. We're at 170.22. For the diamonds, the high of the October level is 165. So this is where the heads up comes too. the October 2014 level, that's where this market wants to go. The Dow is going to be the first indice to hit it. We're at 172.2. 165.79 is the number. We're down 350 today. Bottom line, you could be down, I suspect we're going to be down 350 tomorrow. You know, the transports were the first sector to hit it. The Dow looks like is going to be the first, well, outside of the NYA, the composite itself. The composite jumped the creek today. And the composite, folks, is the makeup of everything that's inside the Dow Industrials. No, not the Dow Industrials. The Dow, the New York Stock Exchange, rather. That's what that is. The way this is set up, we are at 10,475, and the high of that is, oh my God, this is sick. Check this out. The high, this is only 100 points down. So the NYA is going to want to hit it tomorrow. That's how this is set up. What does that do? That better give you a heads up that the S&P, the probability of the S&P hitting that goes up dramatically. The difference is that the S&P is dramatically much higher than that right now. So you have plenty of time to get a stop in if you're long-term investors. The S&P right now is at 2035. The high of the 2014 level is 120, let's see, 112 points down. Okay? So the low, you're talking 1820. You know, doesn't mean it's going to stop there. You know, plenty of these have basically took out the high, took out the low. Plenty of these large caps. So bottom line, get your stops in, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. You stay right there. My man, Mr. Andy Hex, is going to be coming up, growling and prowling with you for the next hour. Go get him, folks.